Let's first clear up the Goober versus Gomer pile controversy,
all right, okay,
which you initiated earlier today with your piece in which you quoted Goober pile, or Gomer pile.
Gomer.
When Goober, unfortunately, the actor who played Goober passed away this past weekend.
Yeah, I got an email. I had no idea, first of all, that he was, on death's door.
You apologized to the Goober.
The Goober family, the whole Goober clan, the Pyle clan. Sorry about that. But, Gomer, a.k.a. Jim Neighbors, is alive and well.
Right, but the Mr. Lindsay, I don't know his actual name. It was
George Lindsay, yeah.
George Lindsay, who
no
was
longer with us, yeah.
was the Goober pile, who was Gomer's cousin on the Andy Griffith Show. For all those who would. What does this have to do with earnings? It really has nothing to do with earnings.
No. It just was a way to seg into it. Surprise, surprise, surprise. Like I can't say it the Alabama accent that he has, but that's the thing is that surprises they don't get you much.
Here we have a chart which I'm not sure really tells us anything other than Wall Street has reached a certain détente or accord with America's CEOs, which is, look, we're going to get guidance from you guys. It's always going to come in a bit lower, and then you guys are going to beat the numbers. Everybody's going to go home happy. Did I get that right?
That's pretty much the pattern. I mean, how many times have you listened to a lot of conference calls? Great quarter, guys. Kind of makes me sick to my stomach, actually.
Yeah,
because it's a little too chummy with management.
That's really weird.
Yeah, that's what I thought that was
on the calls. They're sucking up to the CEOs right there on the calls. It's kind of embarrassing.
As a journalist, it's sort of
Yeah.
But and as a former analyst, I never said that. In any language. But anyway, so it's. I mean, saying that 70% of companies beat expectations ain't saying much. It's pretty much par for the course. Has been for the last decade. Back when analysts used to get whispers in their ears, they wouldn't tell them necessarily the exact number. They'd say you're getting warmer, you're getting colder. Then it wouldn't happen as much. Analysts look good if they nailed the number. Now companies can basically put a guidance out there and then make sure that it's conservative.
Do you think, I'm going to go back to some of my business school debate topics that we're going to talk about.
Okay,
I want yes/no answers from you. No dilly-dallying, Spencer.
No.
Okay? The debate years ago was the company shouldn't even do quarterly numbers because it makes management short-term focused, too focused on quarterly earnings. They manipulate the guidance. Should U.S. companies have quarterly earnings? Yes or no?
They should. Because by that argument, they shouldn't have stock options either. They should, because that also motivates them to hit short-term targets, right?
Second question: should or should they not provide guidance on a quarterly basis?
I think it's fine to do so. I think as long as the rest of the world takes it with a pinch of salt.
Yes or no's.
I think
yes.
As long as you see what they're doing, yes, it's fine. It's harmless. It's harmless.
And should the stock market react as abruptly or with the volatility that it does to plus or minus little changes on whether or not they beat earnings or not?
Of course not.
Of course not.
But going back to your first question, should they have quarterly numbers? I mean, what would I write about it? Right ahead of the tape. I'd be out of a job. I'd be out selling apples on 6th Avenue. It'd be terrible. Right?
I like that kind of
insight.
For
that reason alone.
That's why you're popular on this show, Spencer. It's that kind of cynical insight that allows us to do what we do every day. Spencer Jakab, ahead of the tape. Thank you very much.
Thank you.